Today we're going to learn about a bank reconciliation. A bank reconciliation is completed to protect the cash account. The cash account listed on the books side is listed on the balance sheet under cash. It's also listed in the general ledger. The bank's cash is listed in the bank, but it will come in a bank statement. The bookkeeper or accountant will complete a reconciliation between the two of those balances. So over to the board, you will notice that I have the bank side listed and I also have the book. Okay, over here is an example of my PowerPoint example that I provided. You will always start your bank reconciliation with the bank and the book, the beginning balance. The beginning balance is always the ending balance listed on the bank statement. So whatever that balance is, you will start with. So for the example that I provided in my PowerPoint, the beginning bank balance is $575. For the book, and again, that will be in the general ledger. That is their ending cash balance before you completed the bank reconciliation. The book side, the beginning balance, is $1,801. Okay, and this reconciliation is completed as January 31st. Okay, and it could be any year, 2000XX. So January 31st, you have your bank beginning balance and you have your book beginning balance. Okay. The next items that you will look at, and so we'll start with the bank side first, and we'll go over each of the details. So the first item for the reconciling item on the bank side is called, and this you will always add, deposit in transit. And that, for my example, is $1,775. A deposit in transit is just that. It's a deposit that the company has received and they've completed a journal entry on their book side, but it could have been put in a lockbox. It could have been put in a depository for the bank, and it hasn't been brought to the bank yet. So that's just a timing issue. That will eventually clear out when the bank receives those deposits. So a deposit in transit will always go on the bank side, and it will be an addition. The other most common reconciling item for a bank balance is outstanding checks. And you will always subtract outstanding checks. Okay, so outstanding checks for my example is 606. Okay, and I'm totally fine when you're working with your notes before you work in the lab if you show this as a negative. However, when you work in the lab, it will be shown as a positive number. You just need to know to subtract that. When you also work in the lab will make you do a subtotal. Okay, so up the top, those are your only additions for the bank side. So the lab will make you do a subtotal. So what you'll do is you'll add the 575 plus the 1,775, and that will equal 2,350. Okay, and that's a positive number. Right below it, you have your outstanding checks. Outstanding checks are checks that the book has written. They've written out the checks, They've sent them out to, for example, suppliers, and the suppliers has not cashed them yet. So that, again, that's a timing issue. So outstanding checks will always subtract from the bank side. And when you do that, you would complete the reconciliation. You would take your subtotal, 2,350, subtract your 606, and that would equal your adjusted bank balance. Okay, so draw a line. That's your adjusted bank balance, and that's 1,744. That's your adjusted bank cash balance for the bank. Now let's work on the book side. So the book balance, one of the most common reconciling items are, for example, again, looking at my PowerPoint, is called an EFT collection. And in this example, it's an EFT collection for rent. It could be an EFT collection for note receivable. It could be an EFT collection from a customer. EFT stands for Electronic Fund Transfer. So the EFT collection in this example was related to rent. And that amount is for $330. When you read the word collection, that's a positive number. You're collecting that money into your bank. So that's increasing your book side. Also, for my example, and again, once you're done, the lab will make you do a subtotal, but we'll wait on that, okay? The other side, and so this will be an addition. This will be adds. The other side will be subtractions. Some examples of subtractions could be service charge. But let's make our life easy. Let's call it service charge. Remember, you're always going to end it in the word expense. Okay, so when you work in the lab or the textbook that we're using, most often they're going to put that under miscellaneous expense. Okay, so service charge is $9. Okay, but again, you could make your life easy. You could end that in the word expense. Another one could be NSF checks. Okay, and this example, the NSF check is for $115. The service charge is what the bank charges to use their checking account or their services. An NSF check, that stands for non-sufficient funds. Okay, so what has happened in that is most often it's related to a customer. So the customer paid your business for services. You took that check to the bank. You had added it previously in your book side. But when you took it to the bank to collect on it, the bank said, no, we're not going to accept that. There's not enough funds in that customer's account. That check is non-sufficient funds. Another name for that is a bounce check. So again, that relates to a customer, and we'll think about that when we do the journal entries. Okay? So NSF checks. Okay, another charge that they could have is you ordered checks. So they have a charge for printed checks. And as you can see, I'm running out of room here. So charge for printed checks, and that is $11. Okay? All right. On both sides, you could also have an error. So either the bank made the error or the book made the error. Here's what I can promise you. Whoever made the error will have the correction on their side. So if the bank made the error, the correction will be on the bank side. If the book made the error, the correction will be on the book side. I cannot promise you whether you will add or subtract like I have up to this point. The only thing I can tell you is you have to analyze it. I can promise you one more time, whoever made the error will have the correction on their side. So when you're going through, you're thinking, did they take out too much or did they take out too little on that error? In this case, this is a correction of book error. So what happened was the bookkeeper wrote out a check for $280, okay? She wrote the check out correctly. She sent it to the bank. Everything was fine. However, when the bookkeeper made the journal entry, the bookkeeper only made it for $28. Should have made it for the correct amount of $280. So in that example, the bookkeeper took out too little. She didn't take out enough. So in order to correct it, she would take the difference between the two. Why the difference between the two? Because she did make it for $28. She just didn't make it for enough. So she takes the difference between the two, which is $280 minus $28. That's $252. So she only makes the adjustment for $252. Okay? And what she would do, because it was a check that was written out, she didn't take out enough. She should have decreased cash more. So in order to correct it, you will subtract it. So you go over and you put in correction. And this was related to an employee's salary. And you want to know that when we do the journal entry, because you have to know what it related to. So correction of salary. And that is for $252. Okay, again, running out of room here. $1,744. Okay. All right, so now we have the bank reconciliation completed. The next step that we're going to do is journal entries. Now, one more time, who do we work for? In this case, we work for the book. So we can only do entries for the book side. We can't do entries for the bank. So students will ask me, well, what do you do? Well, you get on the phone and you call the bank and you say, you made an error on my account. But we can only do journal entries for the book side. So the reason that I did this vertically was to be able to show you the journal entries. Okay? All right, so now I'm going to take this off. Okay. I'm going to put this down, and now we're going to do journal entries. Okay, so when you do a journal entry, especially when you're first learning, draw a line down the middle. That will clearly separate your debit from your credit. You have debit on the left. You have credit on the right. Remember, your debits are listed first. So we're going to go in order of the reconciliation. All right, so we have an EFT collection of rent. We're working on the cash account. Go back to the basics. Cash is classified as what? Good, it's an asset. So you increase an asset with a debit. Before we begin, all our adds will be a debit to cash because we're increasing the cash account. All our subtractions will be a credit to cash because we're decreasing the cash account. But still, we're going to go over them step by step. EFT rent collection. Well, in that case, they're the landlord. So rent is good to them. So rent, we're going to learn, one side will be revenue. Okay? So again, it's an addition. So I go over here and I debit cash. For how much? I work right from my reconciliation, $330. I indent a little bit 5 spaces, and I'm going to do my credit. My credit is rent revenue. $330. I just put a brief description. Collected rent. Okay. I go to my next entry that I will make. And again, working from my reconciliation. My next item is service charge. For the lab, you can combine your service charge and your charge for printed checks. Why? Because those are expenses. So you can lump those together and make one entry. That's not a compound because your debit will equal your credit. You're not going to break that out. So we could put that to miscellaneous expense. So I go over here and I add the 9 plus 11, okay, and that's going to be 20, okay. All right, so I will debit, and again, the subtraction is going to decrease cash. So I debit miscellaneous expense, $20. And I credit cash, $20. Okay, my description, I could tell myself printed checks and service charge. Okay, so that's our second journal entry. Okay, the next one that it has is NSF checks. And again, I said that non-sufficient fund related to a customer who had previously paid. Well, that bounced. So now we have to put that back in our records so we know to go back after that customer that they still owe us money. So what that will affect is accounts receivable. We previously had a receivable. We thought that cleared out. It did not. So we go back in and we're going to debit accounts receivable. For $115. Okay, and then I'm going to credit cash for $115. Okay, and you could just tell yourself bounce check for customer. Okay. The last one was related to an error. So one more time, the bookkeeper made an error and it was related to salaries. So in order to correct that, we needed to know it was related to salaries. So what you're going to do is you're going to debit salaries expense. And whatever that amount is on the reconciliation, 252. And you're going to credit cash 252. Okay? And when you're done, you would have a little T account, and then you would figure out the final balance of your cash. Well, the final balance of your cash account, okay, is now, after all these journal entries, you would do a T account. You would have cash. So your cash, your beginning balance, 1,801. That's what we started with. Okay? Well, then we figure out how much we completed our journal entries for. We debited cash here, 330. Okay, we credited cash here, 20. We credited cash here 115, and we credited cash 252. When we do all that, we're going to come down to our final cash balance, which you will see is $1,744. Okay? Good luck in the lab.